Welcome to TradeTheMBI.com. This is John. This report is for the 8th of August. And pretty much as expected here, we were at the little ABM red line that we had drawn in here. Not quite enough of a negativity from our MBI readings down here. We didn't have the white spike significantly enough to cause us to believe that we were going to break down over that. And we had the continued rise of DOC steel right here, which meant that there was enough short-term buying to keep things from decaying, and no change in the orange movement is still lower. So that points to that more bullish stance. And we got back above the 76%. So it was pretty congruent to what our expectations were. And you can see the NASDAQ likewise did the same thing. A little bit softer because it does have the MBI white lead. So shorts are still in the lead on that, but you can see quickly. The interesting part on this one will be that short-term buyers have crossed over orange, which adds to the bullish nature of things. But will they get too far in the lead there, and then they'll be dried up, and then they're going to definitely need support from midterm buyers in that, which we're not seeing at this particular point of the NASDAQ. When we go down to the shakeout here, the histogram is still negative, but not dramatically so at this particular stage, not really moving any lower. And we were coming off that dip below the extreme histogram was still green. So that was enough to give us the clear indication that things were going to support around this range. Treasuries, of course, you had that jump in buying there, but it's faded off. And again, this is an indication that the bond market now agrees that interest rates are not going to change, that the Fed is not going to be reversing course, which is going to put added pressure on it. Simply because oil prices not giving any ground up and still staying above that 80 level. The longer this persists, another round of inflation towards the fall, and that is definitely going to be in the works at this particular range. So you're going to see an acceleration in inflation, which leaves the Fed no choice but to at least be more neutral to aggressive. And this idea of cuts is going to get pushed down even further. So that talk that everyone was hoping for before that really created a false rally in the bond market was not going to happen. The euro still supporting up rather well, given the fact that nobody really wants a euro, but needless to say, they've got to keep this from breaking down, because we know that anytime it gets down towards this 106, it's in critical danger area. So anywhere between that 107, 111 range is fairly reasonable for them to keep it, and it's arbitrarily high, but that's okay. They don't mind doing that, and the Fed's going to continue to support the EU to keep things from falling apart. No activity from gold, even though we should start to see that begin to develop soon, particularly if things start to escalate in the Russian situation. And we already laid those details out the other day about how that potential escalation, and or even in the Mideast, where you had the potential of U.S. forces being on tanker ships and that to protect them in the Gulf. Those can blow up to significant things, and that would certainly create quite a tumult and definitely boost gold in a dramatic way. When we turn to Bitcoin, no surprise, we broke below that 50%, which very congruent to there, but we still had MBI magenta over the yellow, which indicated that we were probably going to hold on fairly decent at this particular range, and we did just that. But again, this lack of volatility within Bitcoin and those things is just the fade off of all the big news from BlackRock, pumping into it, and that. But at this particular stage, nothing is happening, and you can see the same thing in ETH, just zero volatility at this particular point. So there's just real no excitement in from that range. When we look at our 50K, we had the turnaround bounce that started in the morning, and then there was just some slight weakness that developed with the MBI spike took place there, but it turned around pretty decent right at the 38%, covered that one, and then turned around to go long above that 50% move, and that's been pretty consistent at this particular stage. So that was a nice little turnaround bounce, nothing shocking. You can see we got shakeout gold here rising, which is pretty strong from a trend standpoint, so it should be enough to keep things going. Intraday, when we look at it from the early morning, it started to break out from the European session up and down, and then we got a little bit of volatility, but as we got closer to the open, things flattened out and then began to make their ascent, and pretty much was straight up for most of the day going into the close and that. So all in all, pretty consistent with our expectations, nothing out of the ordinary. So we'll just continue to play the readings as they are, and unless there's some unique situation on the international horizon, things are probably just going to continue to maintain that modest volatility at this particular stage, but I would expect that it's going to pick up because things can't remain in that kind of stasis at this particular point. Something is going to break, and that's going to cause a significant move. So we'll just keep following the readings to see the direction that that's going to be. We'll be all set. As always, though, trade well. We'll talk again later. Look for me in the Skype chat.